Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So in today's video I'm going to share with you guys my watch list. This is what I do once every 3 months. So I set up all the companies that I want to either add to or add to the portfolio. So companies that I already own and I want to buy more of, or new companies that I'm looking at. And that's what I've done now. So I'm going to share with you what I'm doing in January, February and March, inshallah, for the next 3 months. Again, I just need you to make sure that you have your own watch list and make sure that you are, you've got your own margin of safety, all other things that we talk about. I'll talk about how it works and so on. And inshallah, I'm currently also updating the daily watch list as well as, of course, the watch list I will share with you guys. Because the earnings reports are starting again, which means a lot of company will start reporting, and when that happens, that means the valuation is slightly changed, basically either for the better or for the worse. So I will be updating that soon, inshallah. If you like this type of content and you're enjoying what I'm trying to do here and the transparency and everything else, then I would really appreciate if you can give the video a like, because it really genuinely helps the channel, as well as, of course, if you can join us on the Patreon account, that will be very helpful. You get access to all the buys and sells that I make frequently. You also get used to and get hold of the dividend trackers, the dividend calendar spreadsheets, the watch list, and like I said early, as well as the private Discord and the Sharia compliant investing ebook. So if you're enjoying that, so if you enjoying what we're doing here, join us in the journey, inshallah. So now what I'm going to do is there are 3 new companies that I'm looking at, inshallah. So what I'm going to do is I'm going to talk about these three companies and give you kind of a feel of what they are first, and then I'm going to show you the entire watch list. Okay, so I'm just going to talk about the 3 companies very briefly, not too long. Okay, some of them I will be doing it entire videos on them, inshallah, soon. But right now I just want to give you a quick overview. And the first company we're looking is Prologis. Prologis, what basically is the company. They call this company basically the Amazon, the landlord of Amazon. Basically, a lot of the warehouses that Amazon uses is actually owned by this company, and they are almost everywhere around the world. So they're very, very well diversified company. For the 1 year, they are up about 7%, and they have basically right now price to FFO basically forward about 23. So they don't seem cheap, but they're not too expensive. Now, looking at their earnings expectations moving forward, okay, the estimates you can see here is about 8% for this year, and then there's a bit of decline in 2024. So 2024, once they report their final, that will be it for about 8.5% growth. And then this year in 2024, they're expecting a bit of a decline. And after that, it's almost double digits. If we just to focus on the first, maybe 4 or 5, you can see there's a double digits, and then there's about 8%, 9%, and so on. So in terms of earnings, in terms of the FFO earnings, which is absolutely fine. And when we look at the year-on-year growth in terms of revenue side of things, you can see is actually in 2023, they're expecting almost a 40% growth. And then after that, they must have bought another company, because that's absolutely huge. It will be interesting to find out if they acquired another company. And then 11%. Now, one of the things that I do normally is I look at these companies. I'm like, okay, I wouldn't mind owning it. I add it to the watch list, and then I wait for that price. When it hits that price, then that's when I start doing a bit more research. So I don't just add it to the watch list and just buy them straight away. So for like the fact I'm saying now, they might have acquired another business, is because I really don't know. So as soon as I basically hits to my price target, if it does, and then I will be doing a bit more analysis on this company and find out about everything they do, what they've been doing the last few years, and so on. So okay, so that's really important. Right, a couple of more things about the company. So in terms of market cap, it's $122 billion, and they pay 2.6 dividend yield of 2.67% right now. The payout ratio is actually quite low for a REIT. REIT is up to 90%. 10% latest increase on 12% over the last basically 5 years, which is really good. I like the fact that they actually growing that dividend. And again, if you know me, I love dividends and I love dividend growth companies, and this company ticks both of those. And the reason I like dividend growth companies is because I'm not really focused. I don't really need the income right now. I want these companies to compound and basically give me more money and then increase that money as we go along. So inshallah, when I want to retire in 10-15 years from now on, then at least that I can use that money by them. Okay, so 9 years of increasing that dividend, $3.48. Basically that's what you get every quarter, which is quite nice. And right now looks reasonably valued. So the 2.5 and right now it's about 2.67. So the 5-year average is about slightly higher than the 5-year average. And when we look at the PE side of it, 28, and right now about 30. Is it 30? Wow. So the forward PE was 23. So that's interesting. Again, that's something that I'm going to look into, but more details. Again, as you can see here, adjusted FFO per share. By the way, they don't use EPS. We're using funds from operations. Basically that's what it stands for. So funds from operations is similar to free cash flow for REITs, basically. So that's what I meant. So similar to free cash flow for REITs. Now a couple of things, looking at sales and shares outstanding. Shares outstanding is actually increasing every single year, which is absolutely madness. So they're diluting the shares. Again, there must be a reason. So they might be acquiring other businesses and so on. So again, I need to look at that. Bit more details. Sales is actually heading the right direction, which is quite nice. 1.85 billion dollars to right now 8.17. So it's actually quite nice. Return on equity, perfect, about 7%, which is fine. Return on invested capital, about 4%. Operating margins of 41%, and free cash flow margin of 70%. Net debt to EBITDA, basically right now these companies were looking about below 5%, below 5, sorry, and right now it's actually in that territory. So one more thing in terms of this company, looking at Morningstar, it's 3 stars right now. As you can see here, $124 is where they think the price should be, and right now is 133. So it slightly needs to come down a little bit, and I'll show you a bit more details in a second about what my price target is for this company. So the next one that we're looking at is Moody's Corporation, and is very similar. This company is very similar to S&P Global. They kind of have similar sort of products. I'm doing a full video inshallah this weekend. When I get the time, I'm going to put that video together. And as you can see right now, for 1 year it's up almost at 21% and 21.5%, which is quite of course it's done really well. In terms of looking at the earnings moving forward very quickly, you can see it's double digits almost every single year for the next 5 years, which is absolutely amazing. And looking at the revenue side of it, about 8%, 10%, 9%, 7%. So solid growth in terms of that side of things. In terms of ratings, let's have a look at this. Okay, so it's a buy and it's $384 per share, $86 per share, and that's about 1.5% upside from where we are right now. If we look at dividend wise, there's not a lot there, but again, I'm interested in the dividend growth side of things. So 70%. And the reason I like this company is because if I can own this one on S&P Global, those two are very similar in terms of their business side of things. It's like owning MasterCard and Visa. They're both in the same industry, and again, I don't have that many financials side of things companies in my portfolio, so that will be really good to complement what I have already. And again, I haven't made it, of course, a final decision. It's a short list right now, and I will be doing a bit more research. In terms of payout ratio, it's about 32%. 10% growth, 13% growth in the last 5 years, which is really, really good. And as you can see, they've been growing it nicely. 13 years of increasing that dividend, and the safety is 83%, so which is quite nice. Just a couple of things in terms of valuation side in things, you can see it could be overvalued right now. Is below where it should be, and below the 5-year average, and right now we're looking at about 35. So it seems a bit expensive just looking at from PE perspective. In terms of free cash flow, payout ratio is actually decent. It's below 60%. Couple of things, shares outstanding, as you can see, it's declining. Sales is going up the right direction. Return on equity for 52%, which is really good. Return on invested capital, we're looking at about 18%, and operating margins of 36%. Free cash flow margin of 32%. And net debt to EBITDA is actually really good. So below 3% is what they're looking for this type of company. Now going to here, you will see it's 2 stars right now, about 12% premium, $335 dollars per share is where they think the price should be. Right now it's $376 per share. Like I said, it's very similar to S&P Global. They both do credit ratings and bond ratings and all of that madness that happens. So again, really good company. I like the business model. Like I said, it's very similar to S&P Global. I would be interested to see if it hits my price target. Then I'll do a little bit more research on that, and of course then I'll add it to the portfolio. But right now I would probably say it's not a buy for me, but I will show you what my price target is for this company in a second. The third company I want to talk about today is Canadian Natural Resources. This is a company that I've talked about recently. It's up about 9% for the year. PE is very, very low right now. It has a nice dividend of almost 4%. If we look at earnings expectations moving forward, as you can see, this 2023 hasn't done well. 2024 they're expecting about 9%, then 17% growth after that. Again, a lot of the oil companies are not doing great at the moment. So, but again, when it comes to revenue, it's kind of declining. So I'm looking at this company in terms of dividend side of things. But right now, because of the oil companies and how they have performed over the last whatever months, even for 1 year, to be honest, there's not much growth and the expectations are very, very low. And this might be a good time to buy this type of businesses, because in the next 5 to 10 years, they can easily bounce back. And again, a lot of the companies that I'm buying, I'm holding them for the very long time, inshallah. Now, looking at in terms of dividend side, things 4.5%. Market cap of $70 billion right now. Is a large cap. Now, dividend safety of 70%, which is quite nice. In terms of payout, 48%, 21 years of increasing that dividend. I don't think they're in the S&P 500, so I can't say they're going to become dividend aristocrat. 11% growth and then 23% growth in the last 5 years, which is really, really good. You get about $2.89 for every share of this company that you own. And right now it looks reasonable value, because 4.43 is the 5-year average. 4.53 is where we are right now. PE more or less the same where it basically has been in the last 5 years. Quickly show you against shares outstanding is kind of declining. Total shares is going up. Again, it's a very cyclical business, so you have a 1 year where they're doing really well, or maybe 2-3 years where they're doing really well, and then another year that stays down and so on. So you always have to understand basically how cyclical these businesses are. Return on investment on equity is about 18% right now. Return on invested capital about 14%. Operating margins of 24%, and free cash flow margin of 19%, which is quite nice. And we're looking for 1.5. Right now we're looking at 0.83, which is absolutely fine. Now I couldn't find the Morningstar doesn't have any information. It does have some information, but it's not helpful. So I went to simply Wall Street, and as you can see here, the US version of this company is actually, they're expecting this is basically the New York Exchange one. Okay, they're expecting the price to be $106 per share. That's about 40% an upside from where we are right now. And the future growth of this company, they're expecting about basically 14%, 8% to 9%, and so on. Now I'm going to show you the entire watch list. So this is my watch list. Like I said, these 3 companies is the ones that I actually don't own. And as you can see here, the Canadian Natural Resources is actually a buy right now. So what do I do? So it's just for those who are completely new, you've never seen this before. The yellow bits is the bit that basically changes. Okay, so I put the ticker here. Okay, you put the target price from Morningstar, you put the target price from Seeking Alpha. It gives you an average, and then the margin of safety. Now the margin of safety, not if it's basically a high tech company, high flyer of high risk, I give myself more than 5%. Okay, and for this one, for example, I gave myself 5%. For this one, I've given 5%. There are a couple of companies, like if I own the company already, I might give myself 10% if it's basically high flyer or companies that are a little bit risky, and so on. So you have to change that. So for example, I can change that to 10%. Okay, and then now the price is actually $118. If I go back to the 5%, it's $124, which is basically about $6 less, more than where we are right now, less than where we are right now. So there you have it. That's the 3 companies, and then the rest of them, as you can see here, ASML, I really like their business model. Absolutely brilliant company. It's a buy right now, which is quite nice. Cummins. So what this means for me now is, if I want to add more, if I want to buy stocks from now on, whenever I add my weekly money, okay, it will be going to these companies and any other company that I feel like is undervalued at the moment. So I'm going to focus on these ones and then wait for this. So I'll go back to my trading 212. S&P Global, my price target, for example, is $411 per share. Right now is $436 per share. So I will put that an alert, and as soon as it hits that price, I'll get notification. Then I can look at it again and say, okay, do I need a bit more margin of safety? Do I feel like it's going to go down a little bit more, and so on? It's just like you have to analyze that side of things. But as you can see, I've got about 6-7 companies that right now that basically I can add to, and there's a few more that I own. I haven't talked about MasterCard. I don't own MasterCard, so I can actually missed that one out. But MasterCard is actually a really great company. I really like it. I used to own it. I don't know why I sold it. It was at one point, I had too many technology companies in my portfolio. It was like, I don't know, over 30% or whatever it was, just technology companies. And then I sold MasterCard. I took a bit of profit off the table at the time, so I'm not really moaning about that. But as you can see here, their fair value is $421 per share, and right now it's $427. So not far off from where they think it should be. Again, the dividend is not there, but of course, but I'm not buying for the dividend. This company, again, is a huge company, very safe, of course, in terms of dividend payout ratio, very low. They grow the dividends absolutely amazingly, which is really, really good. They pay you $2.64 right now. Basically, they seem actually undervalued based on this, which is nice to hear. But like, again, look at the PE. When you look at the PE, so these companies, you will never see MasterCard or Visa trading below 30 PEs. It doesn't happen that often. I mean, when it happens, trust me, that is a good time to buy those. I'm not saying I'm basically go away and buy them, but as you can see, everything ticks in here. By buying that back, they're buying back their own shares. Total sales is going up. Return on equity is absolutely amazing. Return on invested capital is really good. Margin of save and operating margin is really great. Free cash flow margins is absolutely wonderful. And look, almost nothing in terms of debt side of things. And if we go back here, growth side of things, double digits every single year. This is why I love this company. It's very similar to Visa. It's very similar to some of the companies that I own in the portfolio. So yes, I will be, InshaAllah, looking at this company, adding to the portfolio. InshaAllah, it might happen soon if it hits that price target of $421 per share. It's like $6 from where we are right now. So if it hits that price, InshaAllah, we'll be adding to. Post the video, have a look at this if you are interested. If you have any specific questions and whatever, let me know. Like I said, I will be doing I will be sharing this, of course, with you guys on the Patreon, as well as, of course, updating the daily one for the UK as well as the US. So I'm in the middle of doing that. InshaAllah, I will be sharing that with you guys, hopefully by Friday if I get the chance. InshaAllah, works crazy right now, so InshaAllah I will be sharing that with you guys. Sorry to make the video slightly longer than I wanted to, but I wanted to share with you guys what I'm doing. And again, as always, if you're enjoying this type of content and you really genuinely think like I'm giving you some value, even if you learn one thing, even if you get one thing out of that the whole video, okay, I would appreciate if you can just like the video, leave some comment, InshaAllah, and of course join us in the Patreon account. Like I've always said to you guys, it genuinely helps a lot. Anyway, have a wonderful day. Assalamu Alaikum.